Hey you guys, this is Tamara Manuel, also known as Tamara the Realtor on social media. I wanted to come on really quickly to talk to a specific group of people. I want to talk to the people who are interested in home ownership. You want to purchase a home, but you don't think that you're ready right now, and you just want to have an idea of what will lenders be looking for when you do get ready? Or maybe what are some of the things that you need to be preparing for in your journey for home ownership? So, I just have to be honest and say that the biggest question that a lender or a bank wants to know is, how big of a risk are you? Are you a high risk or are you a low risk? They're going to loan you tens and oftentimes hundreds of thousands of dollars. They want to know, are they going to get paid back? And are they going to get paid back on time? Are you a high risk for not paying them back? Or are you a low risk based on the information that you provide for them? Okay. So the first thing, of course, they're going to do to determine this is they're going to pull your credit. You're going to fill out an online or maybe a paper application, and they're going to look at your credit report. Obviously, your credit score is a score that you're given that basically gives them an idea of what your credit report looks like based on your credit history. So they're going to look at the scope of the last 24 months. Most lenders will look at the last 24 months. They want to know, what does your payment history look like? Do you pay your bills? Do you pay your bills on time? How much in bills do you have to pay monthly? This is going to give them a really good idea of if they can trust that you're going to pay the mortgage loan back. It also is going to give them an idea of how much money they should lend you based on how many other creditors you have and how much those balances are with those creditors. In addition to looking at your credit history, they also want to know about your employment history. Are you currently employed? How long have you been employed with that employer? Are there any gaps of employment over the last 2 years? Do you get any overtime pay? How often have you gotten overtime pay? Is it consistent? Do you consistently make this amount of money every week, every month? These are some of the things that are going to definitely help them to determine if you can pay this mortgage loan back. Another thing that some lenders look for is rental history. They want to know, since you've been renting from this particular landlord or leasing company, how well do you pay them? That's going to definitely give them an idea of how important your living expenses or how important your rent is to you. Do you have reserves? Do you have any money saved up in a savings account? Do you have money in a 401k and CDs? Is there any money that you have access to in the event of an emergency, such as getting laid off your job? So lenders know that things happen, but they want to also know that if something were to happen, you would still be able to pay the mortgage loan on time. Now, with FHA loans, it's not required that you have reserves. With conventional loans, most of the time, it is required. Most of the time, it is required that you have some reserves on hand. Generally speaking, it's 2 months of the mortgage payment somewhere in reserves. So although reserves are usually not required, they definitely make you a lower risk. So what are they looking at? They're looking at your credit report, your credit score, payment history, employment history, rental history, as well as do you have any reserves? Now, as soon as you decide that you want to apply for a mortgage loan, the lender is going to have you complete that application, but they need some documentation to verify that the information that you provided is actually true and accurate. So what are they going to ask for after that? You may as well go ahead and have 2 to 3 months of your last bank statements, because not only are they looking at the credit report, they also want to know how is money going in and out of your bank account on a monthly basis. They're going to want to see your last 2 check stubs from your employer, your last 2 years of W-2s or 1099s if you are self-employed. So they're going to get a current snapshot of your finances as well as the last 2 years with your taxes. They are going to get employment verification as well. So these are just some of the basic things that, for the most part, all lenders will ask for. All lenders that do traditional lending. These are some of the basic things that they will ask for and that you need to be prepared for. Now, if they pull your credit and they see something that raises a red flag, they will more than likely ask for more supporting documentation or an explanation from a creditor or something else to help lower that risk for you. I oftentimes tell clients to just be prepared to be underneath a microscope financially until you close on a home. I hope this video was helpful for those of you all who want to purchase a home. You're interested in home ownership, but you just kind of need to have an idea of what they're going to be looking at. So make sure that you're paying your bills. You're paying your bills on time. Also make sure that you are that you have good employment, stable employment. Know that they will likely check for your rental history. If possible, make sure that you have reserves, money saved up somewhere. It doesn't necessarily have to be in a savings account, but definitely in maybe a 401k account or something of the sort. And be prepared to provide documentation that verifies the information that you've provided on the mortgage loan. I hope this video was helpful to you. Please feel free to reach out to me to ask any additional questions that you may have. Don't forget right now, like this video, subscribe so that you don't miss any more updates. And I look forward to speaking with some of you soon. Thanks. Have a great day.